Exam Scholar, Real Estate Edition.
Question 1. At the close of the Civil War, a law that extended equal rights and real property to members of all races is called A. The Civil Property Amendment of 1866. B. The Property Rights Clause of 1868. C. The Civil Property Rights Act of 1865. D. The Civil Rights Act of 1866. Answer: D. The Civil Rights Act of 1866 is the law that granted equal rights and real property to all races in the United States. Question 2. The Civil Rights Act of 1866 prohibits discrimination in real estate based on A. Nationality and religious beliefs. B. Religious beliefs. C. Gender. D. Race. Answer: D. The Civil Rights Act of 1866 prohibits discrimination in real estate based on race. Question 3. A person with a child under the age of 18 is protected by the federal ban on discrimination based on familial status in order to A. Provide equal access to rentals. B. Allow for blockbusting to occur. C. Provide equal rights to families. D. Allow for a family to live in a tract neighborhood. Answer: A. The federal government provides protection from discrimination for people who have children that need places to live. This protects people from landlords that may try to not allow a person to rent or lease that has children. Question 4. An easement is defined as A. The legal right to pass over your neighbor's land. B. The right of way through your own property. C. The gradual easing away of land by water. D. None of these. Answer: A. An easement is the legal right to pass over another's land to get to your own or another's land. Question 5. The holder of a life estate may A. Maintain the property. B. Direct the disposition of the property at the end of the life estate. C. Renew agreements of the life estate in full. D. None of these. Answer: A. The holder of a life estate may maintain the property for the duration of the life estate. Usually the duration of a life estate is based on the life of an individual. Question 6. If Charles finds a home that is for sale by the owner and tells the owner that he will pay the full asking price and promises to send an earnest money check in the mail in the next 5 days, this contract is A. Valid. B. Void. C. Voidable. D. Unenforceable. Answer: D. According to the Statute of Frauds, all contracts for the sale of real estate must be in writing to be enforceable. Question 7. The value of an investment property, as estimated by an appraiser, the potential gross income does not include A. Settlements from the state government for losses due to eminent domain. B. Estimated rental income based on full occupancy. C. Fees related to parking and storage areas. D. None of these. Answer: A. Settlements or proceeds from the sale of land is not considered in the appraiser's valuation. Question 8. If Janice owns and occupies one side of a two-family house, and she wants to advertise the other side of the house as a non-smoking rental, can this be legally done without discriminating? A. Yes. The right to smoke is not protected by law. B. No. She cannot advertise discriminatory practices in regards to real estate. C. Yes. Since she is occupying part of the house herself, law provides for this protection. D. No. The only type of discrimination she can use is based on race. Answer: A. There is no law that protects a person's right to smoke. Advertising a rental as non-smoking is not discriminatory and is therefore legal. Question 9. When there is a conflict in limitations on the development of property, which rule applies? A. The least restrictive. B. The most restrictive. C. There is no rule to determine this. D. None of these. Answer. B. The most restrictive rule applies when there is a conflict in limitations on the development of property. This comes into play if there are zoning restrictions that conflict with architectural restrictions or deed restrictions. Question 10. If an appraiser was using the Consumer Price Index method to determine reproduction costs, this would be A. Reliable. B. Not reliable. C. Acceptable. D. Void. Answer. B. Reliable methods of determining reproduction costs are the square foot method, most common, cubic foot method, unit in place method, and quantity survey method.
Passing the real estate exam can be hard, like really hard. Statistically, only about 50% of people actually pass the real estate exam on their first try. Those people that pass, they go on to become real estate agents. And the people that didn't pass, they either give up completely or have to try again. Both of these options are painful, disappointing, and upsetting. Exam Scholar Real Estate Edition has been named as the best real estate exam prep by multiple publications for 7 years in a row. If you are about to take the real estate exam, Exam Scholar Real Estate Edition is a no-brainer choice. There is no other real estate exam preparation service out there that comes close. To enjoy the longest membership time, lowest cost, real estate videos, audios, articles, flashcards, vocabulary, exam tips and tricks, a 1-year no questions asked refund policy, and be one of the 35,000 people that it has helped pass the real estate exam, then sign up in less than 5 minutes at www.realestateexamscholar.com.
Question 1. The right of survivors, in joint tenancy, to acquire the interest of the deceased tenant is called A. The right of conveyance. B. The right of survivorship. C. The right of tenancy extended. D. None of these. Answer. B. In a joint tenancy, if one of the tenants dies, the other inherits the property by means of the right of survivorship. Question 2. Real property is defined as land and appurtenances, including A. Permanent structures. B. Trees. C. Minerals. D. All of these. Answer. D. Real property is defined as land and appurtenances including permanent structures, trees, minerals, and rights of them. Question 3. The amount of the outstanding balance on a mortgage not including any interest or other charges is called A. The principal. B. The original loan amount. C. The primary. D. None of these. Answer. A. The principal balance is the outstanding balance of principal on a mortgage that does not include any interest or other charges. Question 4. A public official that keeps public records of real property transactions in their county is called A. A deed transaction recorder. B. A clerk. C. A recorder. D. A registrar of recording. Answer. C. A recorder is a county public official that records of real property transactions in their area. Also called a county clerk or registrar of deeds. Question 5. A written contract that states the terms and conditions under which a property will be sold, and signed by both the buyer and the seller is known as A. A purchase agreement. B. A purchase note. C. A purchase order. D. A purchase contract. Answer A. Of the answers given, a purchase agreement is the most correct. A purchase agreement is the written contract that is signed by both the buyer and the seller that states the terms and conditions under which a property will be sold. Question 6. If a loan has a loan-to-value percentage in excess of 80%, what is required? A. Private mortgage insurance. B. A cosigner. C. A down payment in excess of 10%. D. None of these. Answer A. Private mortgage insurance is insurance required for loans with a loan-to-value percentage in excess of 80%. Question 7. If an owner reduces the principal on a loan before the due date, this is called A. A prepayment. B. A loan reduction strategy. C. A payment in excess. D. None of these. Answer A. A prepayment is a payment made before the due date and reduces the principal on a loan. Question 8. Another term for pity is A. Principal, interest, taxes, and insurance. B. Principal, insurance, topography, and isolation. C. Parties, interest, taxation, and insurance. D. None of these. Answer A. Pity stands for principal, interest, taxes, and insurance. Question 9. A mortgage payment that is not enough to cover the scheduled monthly payment on a mortgage is called A. A partial payment. B. A percentage payment. C. An interest-only payment. D. None of these. Answer A. A partial payment is a payment that is insufficient to cover the scheduled mortgage loan payment and is normally not accepted by the lender. Question 10. If you are given a formal written notice that a default has occurred, this is called A. A notice of default. B. Intent to levy. C. A notice of court action. D. None of these. Answer A. A notice of default is a formal written notice that informs of a default that has occurred and that legal action may be taken in the near future. Question 1. A nonconforming loan is a loan in the amount over A. $147,000. B. $417,000. C. $500,000. D. $1 million. Answer B. Fannie Mae and Freddie Mac's loan limits are any loan up to $417,000. Any loan over this limit is known as a nonconforming loan or jumbo loan. Question 2. The Government National Mortgage Association, that provides funds for government loans like FHA and VA, is also known as A. Ginnie Mae. B. Ginnie Mae. C. Freddie Mac. D. Fannie Mae. Answer A. Ginnie Mae is the other name for the Government National Mortgage Association. It was created by Congress and provides funds for FHA and VA loans. Question 3. If a lender is issuing an FHA or VA loan, where does the funding originate? A. Ginnie Mae. B. Freddie Mac. C. Fannie Mae. D. From the lender. Answer A. Ginnie Mae is the name for the Government National Mortgage Association. It provides funds for FHA and VA loans. Question 4. Ginnie Mae is owned by A. The government. B. The private stockholders. C. No one. It is a non-profit. D. None of these. Answer A. Ginnie Mae, or also called the Government National Mortgage Association, was created by Congress in 1968 as part of the Housing and Urban Development Act of 1968 and is owned by the federal government. Question 5. The Federal National Mortgage Association is also known as A. Ginnie Mae, B. Fannie Mae, C. Freddie Mac, D. Freddie Mae. Answer B. Fannie Mae is also called the Federal National Mortgage Association. Question 6. Fannie Mae is owned by A. Shareholders, B. Private entities, C. The government, D. None of these. Answer A. Fannie Mae is a shareholder-owned company. Question 7. The largest supplier of home mortgage funds is A. Ginnie Mae, B. Freddie Mac, C. Fannie Mae, D. Private lenders. Answer C. Fannie Mae, also called the Federal National Mortgage Association, is the largest supplier of home mortgage funds in the United States. Question 8. Which of these is a congressionally chartered organization? A. Fannie Mae, B. Freddie Mac, C. Ginnie Mae, D. Both Fannie Mae and Freddie Mac. Answer D. Both Fannie Mae and Freddie Mac are congressionally chartered organizations. They are not owned by the government but by shareholders. Ginnie Mae is fully owned by the government. Question 9. When a buyer gives earnest money to a broker, the money is then put into A. The broker's bank account, B. An escrow account, C. The seller's account, D. None of these. Answer B. The earnest money is placed in an escrow account until the transaction is closed. When the transaction is completed, the money is then delivered to the seller. Question 10. Which of these is considered to be an encumbrance? A. A lease, B. A mortgage, C. An easement, D. All of these. Answer D. A lease, mortgage, easement, or restriction is considered an encumbrance of a fee simple title. Question 1. This is a type of ownership where an individual owns the airspace of his unit, but the buildings and common areas are owned jointly with the others in the development. A. Condominium, B. Planned unit development, C. Planned condominium development, D. Apartment conversion development. Answer A. In a condominium, the individual owns the airspace of his/her unit, but the buildings and common areas are owned jointly with the others in the development. Question 2. The original principal balance is best defined as A. The total amount of principal owed on a mortgage before any payments are made, B. The total amount of principal verbally agreed to be paid on a mortgage before any payments are made, C. The total amount of principal owed on a mortgage before any payments are made but after earnest money has been transferred, D. None of these. Answer A. The best definition for original principal balance from the given choices is the total amount of principal owed on a mortgage before any payments are made. Question 3. This is required on all loans having a loan-to-value of more than 80%. A. A trust guarantee, B. Mortgage insurance, C. Warranty insurance. D. Deed insurance. Answer B. If a loan has a loan-to-value ratio of more than 80%, mortgage insurance is required. Question 4. A legal document pledging a property to the lender as security for payment of a debt is called A. A mortgage. B. Property insurance. C. Note of indebtedness. D. A deed. Answer A. A mortgage is a legal document that offers real property to a lender for payment of a debt in real estate. Question 5. This reports the raw data pulled from two or more of the major credit repositories. A. A merged credit report. B. A multiple source credit report. C. A combined credit report. D. A mixed credit report. Answer A. A credit report that pulls from two or more of the major credit reporting agencies is called a merged credit report. Question 6. The time during which the lender has guaranteed a certain rate is called A. The lock-in period. B. The opportunity window. C. The period sans expiration. D. The evaporation period. Answer A. The lock-in period is the window of time in which the lender has guaranteed a certain rate. Question 7. Loan-to-value is best described as A. The percentage relationship between the amount of the loan and the appraised value or sales price. B. The relationship between the amount of the loan and the comparable net value. C. The numerical relationship between the amount of the loan and the lowest sales price in the last 6 months. D. The percentage relationship between the length of the loan and the appraised value or sales price. Answer A. The percentage relationship between the amount of the loan and the appraised value or sales price is called loan-to-value. Question 8. Loan origination is best described as A. A process by the lender in getting new loans. B. A process in which the loan amount is released by the lending institution. C. The originating source of the loan. D. None of these. Answer A. Lenders typically call the process of getting new loans as loan origination. Question 9. This type of insurance protects against claims against a property owner for negligence or bodily injury or property damage to another party. A. Property insurance. B. Mortgage insurance. C. Liability insurance. D. Life insurance. Answer C. Liability insurance protects against claims against a property owner for negligence or bodily injury or property damage to another party. Question 10. A nonconforming loan is also called A. A jumbo loan. B. A bulk loan. C. A loan in excess. D. A grant loan. Answer A. A jumbo loan is also known as a nonconforming loan. Question 1. What special type of ownership is available in most non-community property states and is only available to married persons? A. Estate by escheat. B. Tenancy by the entirety. C. Dual tenancy. D. Coup estate. Answer B. Tenancy by the entirety is available in most non-community property states and is automatically the assumed form of ownership when a couple purchases real estate together unless they opt for another form. Question 2. If a restaurant is located in a section of town that has been rezoned from restaurant and retail to commercial office building development, the restaurant can remain there by use of A. A special use permit. B. Nonconforming use. C. The grandfather use clause. D. Tenancy in specuity. Answer. B. The restaurant can remain in place by nonconforming use. The restaurant will not be able to expand into other neighboring sites, however. Question 3. A broker gives a written step-by-step instruction manual to new agents and instructs them to follow each of the steps exactly in order to produce sales for the brokerage. In addition, the broker threatens to discipline any agent that does not follow the steps, up to and including termination. The agent should A. Be scared of losing the position in the brokerage by means of firing. B. Follow the directions step by step. C. Do what they feel is best for obtaining results for the brokerage. An agent is an independent contractor and liable for results only, not the means they are achieved. D. None of these. Answer. C. A real estate agent working under a broker is liable to the company only for the results achieved as defined in the hiring contract and not by the specific means they are achieved. This is an independent contractor arrangement. If it were an employer-employee relationship, the employer can dictate the specific means of obtaining performance. Question 4. To match the specifications of a subject property, in the market data approach to appraisal, the sales prices of comparable properties are A. Increased. B. Decreased. C. Adjusted. D. Net zeroed. Answer. C. In the sales or market data approach to appraisal, the sales prices of comparable properties are adjusted to match the specifications of a subject property. Question 5. In real estate, the simplest form of property ownership is called A. Joint. B. Tenancy in common. C. Community. D. Severalty. Answer. D. The simplest form of ownership in regard to real estate is severalty because there is only one owner. All other forms include multiple party owners involved. Question 6. What is the formula for determining the value of an investment property? A. Net operating income divided by capitalization rate. B. Capitalization rate multiplied by net operating income. C. Potential gross income divided by operating income. D. Potential gross income divided by capitalization rate. Answer. A. Net operating income is divided by the capitalization rate to arrive at the value of the property. Question 7. If a buyer decides to pay for a property in cash, which form is required to be filed according to the IRS? A. Form 1090. B. Form 9600. C. Form 8300. D. Form 2740B. Answer. C. IRS Form 8300 must be filed on all cash payments that are $10,000 or more. Question 8. A cash payment of $10,001 is given as earnest money to secure a property. What must be filed? A. A documenting receipt. B. A procurement contract. C. An IRS Form 8300. D. An expediting loan form. Answer. C. The IRS requires any cash payments over $10,000 be recorded by filing a Form 8300. Question 9. A vendor vendee is a term that best describes the relationship between A. Purchase and sales. B. Mortgager mortgagee. C. Grantor grantee. D. Optioner optionee. Answer. A. The term vendor-vendee is best matched with purchase and sales. Question 10. Which term is best related to lender-borrower? A. Grantor-grantee. B. Mortgager-mortgagee. C. Optioner-optionee. D. Seller-buyer. Answer: B. The best match from this list that is related to lender-borrower is mortgager-mortgagee. This relationship is a lender-borrower relationship.
Exam Scholar, Real Estate Edition.